JP Morgan just dropped a bombshell forecast. There's now a 60% chance of a US recession hitting by the end of 2025. They've bumped up their prediction after analyzing the latest economic data, warning that we could see higher inflation and slower growth. The last time we saw similar economic conditions was back in 1986, and that led straight into a recession. But here's the thing, you don't have to be caught off guard. There are specific steps you can take right now to prepare yourself financially before things get worse. First thing to tackle, your car insurance. Most American families overspend by over $1,000 a year on auto insurance without realizing it. The fix is simple. Use comparison sites like Insurify to see what other companies will charge you for the same coverage. It takes maybe 2 minutes, and you'll likely find a better rate. When money gets tight during a recession, every dollar you save matters. Next, deal with credit card debt before interest rates get worse. If you owe less than $100,000, debt consolidation can help. Instead of paying 20% to 36% interest to credit card companies, you can get a personal loan at rates as low as 6.4%. Use that loan to pay off your credit cards completely. Now you have one payment instead of several, and you're paying way less interest. If you own your home, you're sitting on potential cash through a home equity line of credit. This works like a credit card, but you borrow against your home's value at much lower interest rates than regular loans. It's emergency money that's already there if you need it. Having this set up before a recession hits gives you options when others don't. Get a financial advisor now, not later. People with advisors typically beat the market by about 3% per year, according to Vanguard's research. But more importantly, they handle all the complex retirement planning and tax strategies you probably haven't thought of. When the economy gets rocky, having someone watching your money full-time is worth it. Time to cut unnecessary expenses. Cancel subscriptions you don't use. Apps like Rocket Money will show you exactly what you're paying for each month. If you need home repairs, do them now before tariffs make materials more expensive. And consider a home warranty to cover unexpected breakdowns when money might be tight. These aren't just suggestions. They're your financial lifeline before things get harder. Start with the easy wins, like comparing insurance rates and canceling unused subscriptions. Then tackle the bigger moves, like debt consolidation and setting up that home equity line. The time to prepare is now, while you still have options. Don't wait until everyone else is scrambling to do the same thing.